But we can, what's the term I need to use here? My brain is locking up on me. We can use past patterns to get a good idea about what's going to happen. And one of the things that has happened time and time again is that when the market goes into a compression pattern like this, it's actually been longer than this. It's been all the way since 2006. The pound has been in a compression pattern. We know that when the market comes into a compression pattern and it does finally break out, it is typically spectacular. Okay, so this is the compression pattern. What that translates to down here is false breakouts, not difficult trends to follow. It means that most of the money is going to be made in the London session, not the New York session. Don't let anybody tell you any different. I don't care what the system is. I've seen all of the marketing hype that's been out there, and when I've gone in and paid the money and looked at the trading systems and listened to what they say once you fork over your cash is that, well, you've got to trade the London session. Bottom line. There are some opportunities in the New York session, but they've gone down from maybe 5 or 6 a week to probably 3 to maybe 4 a week. So we just have to understand that. We have to know that and be happy with that. It also means that in a lot of respects, trading is much easier because if a trade isn't working out, just get out of it. Okay, this is not a time to hope and pray that the market is going to continue moving in your direction. It's actually a lot easier than that. If the market isn't moving for you, just dump it off. Over the last couple of weeks, we had lots of counter-trend trading opportunities, really from the 26th on. 1, 2, 3 opportunities to trade against the overhead resistance up here. We also had some opportunity to trade against lower-end support. Really one, this was a difficult one, probably had a stop as well as a trade. 2, 3, I would call that 4.5 almost, because we did have one where the market actually broke through to the downside. So lots of trading opportunities, but you've got to be there to take advantage of them. It's not well suited to autopilot types of trades for most people. What I would suggest you do is go in, test it out in a demo account, and just understand that the market is at a very precarious time. It's in a very precarious position. So we're looking at a lot of whipsaws here, a lot of activity in London, not so much in New York. We're setting up for a very narrow range for this week. I don't know if it's going to hold. I doubt it. The range from top to bottom here is really just too small. So we do have some resistance building in this level here, which is 96.72. Support building here at 96.06. I don't know. I mean, that's not very big for the British pound. I'd like to see that range more in the neighborhood of 140 or 150 pips. But keep those numbers in mind as we start to move along. The resistance from the market moving down, that's this block in here, which is running at an angle, so it's difficult for me to actually get that level to you. But just keep in mind that we do have resistance overhead for the British pound pushing this market down. No real pattern setting up coming into Tuesday. So really just keep your powder dry. Not a big enough range, I think, to really get very many good trades. I don't have visibility right now is what I'm saying. So just come into Tuesday, keep the opportunities in mind. Take a look at the quick start videos for counter trend trading, especially coming up for the next session.